How does the central bank's decision to lower interest rates affect your money market fund and the economy in general? This is to answer those who have been asking this, especially after the central bank will reduce the rate, and those who have not heard about it perhaps as well. I'm here to update you on what's happening in your money world. My name is Otachi, and welcome to the Money Conversations. On 8 October, the Monetary Policy Committee met and decided to reduce the central bank rate from 12.5 to 12%. This was a decision that was made in light of the Kenyan's improving inflation rate that is right now at 3.6, where it was 4.4% in August. And this, by the way, is the lowest that we have seen in over a decade. Moreover, the Kenyan shilling remained very stable against the United States dollar, which is against earlier speculations by so many of the brilliant Kenyans out here who thought that Kenya's economy by right now would be dead, or the dollar will be trading at 200 bob and above. So anyway, the dollar stability also became justification for this. And why does this cut really matter? While the previous high CBR had some successes like managing the inflation, it also came with some downsides, whereby private sector credit growth had hugely slowed down, and even some non-performing loans did hit record levels in the banking sector. In other words, many people were unable to pay back their loans, and because of all that, the central bank is now taking steps to stimulate the economy by making borrowing a little bit cheaper than it previously was, and therefore it's trying to encourage more investment in the country. So what does this mean to you and me as investors? Here's what we should be expecting to see over the coming few days. To start with, let's talk about the T-bills, the T-bonds. Their rates are expected to decline, and although we had already started seeing some slight decline already, we are going to see them potentially drop at a slightly faster pace than before. And then next, what happens to deposit rates offered by banks through their savings accounts and their fixed deposits? These will also see a decrease, meaning that anyone going for them will start seeing lower returns on their savings than what they were seeing previously. I hope you're aware, by the way, that when you give banks your money in savings accounts, you're actually giving them capital to loan others, which is their core business. So if they are going to get slightly less profit in their business, where you are definitely going to get a reduced rate. And when it comes to bank lending rates, we should also start seeing a fall in the rates, which in return is going to make loans much cheaper for both businesses and individuals. And you see, this drop might seem small, but when it comes to big money, it can actually be very significant. This could also mean slight drop in commodities, although Kenyans, by the way, they adjust quickly when prices go up, but when it's the other way around, zinafaa kushuka, utangoja sana. But bora uhai ama vipi? And last but not least, the money market funds, the fixed income funds, or in general the unit trust. What is going to happen to their returns, and what is going to happen to our investments? So kuna wale wenye automatically jump to the part, are we safe? Should I take away my money? Should I withdraw my money? Don't worry, everything is safe. The only thing that you're going to see is that the interest rates are slightly going to come lower. Remember, if you've been following the money market funds weekly updates that I do on this channel, you have already seen a recent drop in returns across the board, all companies. Hii ni side effect wanga ya the economy stabilizing, and now going forward, of course, with the lowering of the CBR, which directly affects every other place that the money market funds are invested, we are therefore going to see a further drop, and most of these money market funds will start offering slightly lower returns than usual. But remember that this drop will not be gradual, I'm not diving, but we shall be here to update every other week. Now, the big question that we come to, should we keep investing our money in the money market funds? The answer is a capital yes. Markets do go up and they also go down, and the average right now is still doing very well. If you can go back to the updates, yes, you will see what I'm talking about. And there are those who are saying that perhaps we should try the international market. We already saw the central bank of the US also reduce the interest rates as well, and this is also going to further lower the returns on the options that we're talking about. I think the most important thing that we need to keep in our minds as investors is that what we need is clarity on why and what and towards what we are saving. So this clarity and goal specifically will help you to know where you're going to put your money. So for those who are accumulating towards a goal, the money market funds are still the best option. If you go back to the beginning of the year, like I already said, the average return was about 13%. And now when we are at 15+%, you still have a good opportunity to make big steps ahead before the rates slow down big time. So if you're yet to open an account, this could be the time that you need to do so to last quarter. But if you already have an account, make sure you start topping up that account as we close this year so that you gain faster while the rates are still doing good. With rates expected to continue declining, this could also be that perfect time for those with idle, and I emphasize idle money, to invest in long-term bonds. Locking in higher yields, especially right now, could protect you from the downward trend in interest, ensuring better returns in the long run, because you see the existing bonds do not change their interest rates either up or down once it has already been taken. So only the newer bonds are going to be affected by the lower rates. So I believe this video has answered some of your questions, and you can actually check out this other video over here for other safe places where you can start diversifying or investing, especially after you have reached your money market fund target. And I will also leave very important links in the description below to help you maneuver around and to get started in some of these accounts. Thank you so much for watching, and I can't wait to see you in the next video.